It's good to see that you're here and ready to take some notes regarding the exam. A lot of what we're going to be talking about is reinforcing and repeating the things that I've said throughout the study period. And as we've seen, especially with 10-week study periods, they do go very quickly. So there are 3 documents that you should now have that are related to the final exam. The first one being, of course, the exam guidance notes. Then we have the practice exam, which I'm going to use to illustrate today's lecture, and of course the handout for the lecture. Very quickly in regards to the exam guidance notes, I think you can read through pretty much yourself most of what information is contained on it. The critical parts are, of course, that it is a closed book exam, so you can't bring in the handbooks, accounting, auditing, or otherwise. You just have to rely on what you remember walking into the exam. Please make sure that you have obviously a couple of pens available so that if one runs out, you can continue to write. I remind you that the exam is split up into 2 parts, as we'll see shortly. There are 2 booklets that are provided. Can you please answer each section in its correct booklet? Don't put them all into one booklet. It just makes it easier to answer to mark the questions, because I'll be, as with the assignment, I'll be marking all of it. So I'll mark all of question 1, then I'll do all of question 2, and so on. So if it's split up and numbered quite clearly by yourselves, it obviously makes it easier for me to find and to mark. There's no reason for the splitting up of the exam paper in terms of difficulty. It's not to say part A is the easy part or the hard part and part B is the easy part or the hard part. It's just split up into 2 parts to make it easier for me to do the marking. Now, in terms of when you're doing the questions, you can do them in any order you like. You can start with question 3. I would recommend question 3 because that's the audit liability question, and that one's quite standard in how you do it. You'll see when we go through the strategy on how to answer it that it follows a set pattern. Follow that pattern, you'll be fine. Pick a question that you're comfortable with that takes the least amount of time for you to do, and you're fairly confident you're going to get a good mark. It is about psychology, making sure that you feel good from the outset. Don't pick the hardest question that erodes your confidence and you start second guessing yourself. Use headings as much as you can in terms of, for example, with the audit liability question, there are steps involved: establishing duty of care, establishing negligence, establishing loss, and so on. If you use those headings, it makes it easier for me to see your train of thought, to see how you're answering the question. If you like, you can also bring in a highlighting pen. So with the headings, you can highlight the headings. If you use yellow, it makes it easy to see. Just little things like that. It's not going to get you extra marks. It just makes it easier for me to see what you've done and to mark it. So presentation can count for a little bit in terms of helping me more than anything to make sure I find everything that you want me to see. Don't worry too much about how much paper you're using. It is recycled paper, so you don't have to scrunch it all up thinking that it's helping the carbon footprint of the world. You can use 5 booklets. They will get mulched in 12 months' time and be turned into booklets to create pain for the next group of students. So just use as many booklets as you need, space it out. If you only like writing on every second page, that's fine. Just make sure you answer all of the questions. There are no choices. Every single question is compulsory. The Breakup, as you can see there, 5 questions, which are worth approximately 20 marks each. Broken up into Part A, 21, 20 and 21, and Part B. Now, a little bit further down on page 2 of your exam guidance notes, you can see what each question is related to. I did say that would definitely be an audit liability question, and sure enough there is. There is definitely an inherent risk question, there's an internal control question, and there's ethics and professional conduct. So all of the critical areas are discussed. And then there is this, not so much generic, but overarching question, question 1, which is concerned with general auditing principles. It is 4 separate questions. In other words, it is not a case study. It does not build, it does not ask you to read some information and answer 4 things. It is basically 4 different things. So if you can't answer the first part, then the worst outcome is you're going to lose 4 marks in question 1. All right, so there are 4 distinct questions that can ask you about any aspects of the course. Obviously, I'm not going to tell you what they're going to ask. That's the part that I won't say anything, but I am telling you what the other 79% of the exam is assessing. So I know you will want to ask, or people will want to try and squeeze as much hints as possible out of me regarding question 1, but everything I say is contained within this lecture. I won't give any more hints about question 1 outside of this lecture. The only other thing I will give as a hint for question 1 is it does focus on the fundamental principles that we have been talking about in the lectures. In previous study periods, for example, I put in something as innocuous as what are the primary responsibilities of the auditor in undertaking an external audit. And I said, what are the 3 primary responsibilities of an audit? And all students had to do was go, oh, Chris kept talking about those 3 things: numbers, disclosure, and going concern. And that was 4 marks, not just saying those, but the numbers, to say that the numbers are reliable and represent what occurred, disclosure, that they follow the accounting standards, and going concern, that they will continue to operate. So just a brief explanation. And that was worth, I think, 4 or 5 marks. I used that a couple of times last year in various cohorts. Probably not going to use it this time. But that's the sort of thing that I could ask. If you've come to the lectures, and I see quite a few familiar faces here, you would have listened and heard the things that I emphasize. You'll be ready for the exam, including question 1. You can see what the other questions relate to. I'll speak to each of them in turn in today's presentation, and just to get you an idea of how to answer the questions. So it's not about presenting a solution to you. What you've hopefully been able to gain from watching the lectures or coming to the lectures and looking at the tutorials or going to the VCs or watching the VCs, what you hopefully would have seen is that the focus has been on how to answer, the strategies that you develop in how to think from an auditing perspective. And if you've been able to nail that, to understand that, it won't matter what questions I ask. The facts won't really matter because you will still use the same approach. You will just know what to look for and how to use the information when you find it. That's what auditing is. It's not about memorizing things. It's about understanding the processes and the strategies of conducting an audit. If you do have any questions, throw them at me. The only question, of course, I won't answer is, when do I get my assignment back? No, just kidding. Any questions that you have about the exam, any fears, any concerns, any clarification you need, just scream away and just tell me what your query is. We'll get stuck. So everyone okay with the guidance notes? I don't need to read any more off it, do I? All good with it? Cool. Let's have a look now at the exam, and please do take a note of this. Every year the queries always come, can I have the solutions to the lecture? We're going to go through it and you'll see you don't need the solutions really. Okay, we're going to go through 5 different areas for this practice exam paper. You'll notice that one of those, being audit reports, doesn't appear to have its own question in the exam paper. That doesn't mean you should just switch off and not think about it. Sometimes it can turn up in small components in question 1, for example. It's not to say that there is a huge question. Well, I've shown you that there are 4 parts, 4, 6, 5 and 6, but one of those components may be worth 5 marks or 6 marks, might ask you something about audit opinions or to provide a quick assessment of a situation to give an audit opinion. So still watch and take in the notes on audit reports, but you can still take a pragmatic approach and say, well, the most probably that it's going to be worth is 6 marks. So if I'm trying to make sure, if I'm starting from scratch in revising, then you can probably leave it to the end. And if you don't get enough time, the worst you would ever lose is 6 marks, if that's the way you think. But do watch and see how the strategies are used for all 5 topics. So the first question we're going to look at is internal controls. Now, they're not in the same order as what you see in here. So we're looking at question 2 regarding internal controls. Right from the outset, I said make sure you understand the sales and collections cycle. For 2 of the questions, audit liability and internal control questions essentially follow the same strategy in terms of if I want to establish whether there are problems in the sales and collections cycle for controls, I need to know what it should be doing if it works properly. I need to know what the good controls are in the system, how it should be working, because then I can identify if it's going wrong. For audit liability, it's the same thing. If I want to establish that the auditor is doing a poor job, I need to be able to know, or I need to know how they should do the work, so that if they don't do it like that, by default it means they're not doing it properly and they're negligent. So walk into the exam, make sure you have the basic understanding of the cycle that we're using. And to be honest, if you're adequately prepared, it wouldn't matter which cycle at this stage in the end I did use. I could have said, we're going to talk about the sales and collection cycle, but it might be any cycle in the exam. You wouldn't need to panic because you know now that it's a risk assessment. You know that we start with the source documents, we then process those documents, we then adjust the balances and then disclose in the financial reports. And we follow those steps for every cycle. So if I asked you to audit sales and collections or audit the payroll cycle, you'd be following the same steps. But obviously, what makes it a bit easier for you is if we just use the sales and collections cycle, the more knowledge you have about it, the easier it will be in the exam to pick up if things aren't properly working, which it means you're identifying weaknesses. So make sure you understand the sales and collections cycle. So that means you know what the basic documents are that are used, why they're used, the steps in the cycle, you can keep it as basic as you like. You have a customer ordering something, it's then turned into an invoice to signify that they're going to sell it to the customer. They then have to deliver the item to the customer. We're going to assume manufacturing. And then the customer has to pay. If they can't pay, we may have to write off the debt. So those are the basic steps in the cycle. Each of those steps requires documentation. So we have our sales orders, our sales invoices, our shipping reports, and so on. So you don't have to remember too much, but just be familiar with the structure, the basic skeleton of the cycle. Then make sure you know what the audit objectives are associated with the internal controls. So look at what internal controls should exist. And as you can see here, if you have a list of internal controls that you know should be operating in the cycle, it'll make it easier to identify weaknesses. Because weaknesses come in two ways. The control doesn't exist, an absence of the controls, or the control is not working properly. It's there, but it's not working properly. So for example, adequate documentation should be a price list. So that's a good internal control, because a price list means an authorized price list will allow you to make sure that the correct amount is charged for a product. However, if that authorized price list is only checked every 2 months and prices change more often than 2 months, then that one can create the possibility of incorrect prices being charged. Or if you have pre-numbered documents, but you write the number by hand on the top of the document rather than having them pre-printed, that's an example where the control is there, but it's not really working. So have our set of controls and then use that reasonable persons test. This is what I'm saying, that it's very much similar to an audit liability question. Make sure you know what would be considered reasonable as a set of controls. And the question is either going to ask, what are the weaknesses and what could occur as a result of those weaknesses? Or I might ask you, what are the strengths in the system and what errors are prevented from occurring because of those controls? So it's the same question, really. What's the weakness? What could it cause? Weakness, there's no pre-numbering. Therefore, there's a possibility that completeness could be a problem. Documents could go missing. What's the strength? The documents are pre-numbered. What does that prevent? Well, that means that you can ensure everything has been recorded. Okay, so it's quite easy to think about it. When you've got those internal controls, as much as possible, link them to an audit objective. It makes it easier. If you understand the audit objectives, then it makes it easier to think of that what could go wrong part, or what could be stopped from going wrong. So when you see pre-numbered documents, you know that that's attached to completeness. When you think of completeness, you're thinking about everything has been accounted for, everything has been recorded. When you think about authorization procedures, you're thinking about existence and occurrence, hopefully. What does existence suggest? That whatever is recorded should actually be there, that it's not fictitious or it's not in the wrong period or whatever. So list those controls. I've put there how many? 6. Think of as many as you are capable of remembering, but the key ones are there: separation of duties, someone double checking, pre-numbering of documents, which is a subset of adequate documentation, authorization procedures, cancellation of documents, where once it has been recorded, they will stamp it, or once it has been paid, they will stamp it, so it verifies that an action has been taken. So if someone sees it, they know something has been done. So we have our list. This now tells us what should happen, and we're ready to answer the question. We haven't even looked at the question yet. It doesn't matter if you haven't looked at the question yet. You know that you're likely to be confronted with any number of these as either a weakness or a strength. Be very careful. It will ask for a weakness normally or a strength, and then, as I said, if it's a weakness, it will ask what could go wrong. If it's a strength, what does it prevent from going wrong? In most cases, I will ask for errors. Okay, it is highly unlikely, but it can still happen, for me to allow fraud as part of this question. Now, what I mean by that is, in the requirements, it will say, identify the weaknesses, blah, 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 part A, and then maybe part B. Identify the potential errors that could occur if those weaknesses exist. And normally what happens is my obsession with bold, capital, and underline. You'll probably get all three on the word errors. And I might mention errors 3 or 4 times in one sentence or 2 sentences, just to inform you. And sometimes I might even put in brackets, this means you cannot talk about fraud. And then I'll start marking. And I kid you not, sometimes up to 20% still talk about fraud. Maybe the question is understanding the difference between fraud and error. It's a simple distinction. Fraud means you're doing something deliberately to deceive, you're doing something to steal, you're doing something wrong, and you're doing it deliberately. Errors can occur, cash can go missing, numbers can be recorded incorrectly, but it's not deliberate. That is happening because of a mistake. All right, so errors, I'm asking what could go wrong by way of a mistake, not fraudulent behavior. We just dismiss the possibility of fraud normally in internal control questions. So looking for weaknesses, identify either if it's missing or if it's there but not operating effectively. And first thing, when you see the internal control question, go to the requirements. See, do they just ask for weaknesses or do they ask for weaknesses and strengths? Maybe they'll ask for both. Okay, let's assume they ask for both. Then you have your list there. You can put it, especially if you write every second page, on the left page you can put your list and start your question on the right. On the left page you can have your list, and then on the right page where the lines are, you can start your answer, so it's there in front of you. Or you can put it on the scrap paper, so you can move it as you write on the pages. And start scanning the question for evidence of these things. So read through. Is there evidence of pre-numbering? Do they pre-number documents? If they do, and I've asked for a strength, you've got one. If they don't mention it, you can assume that it's not happening. All right, so if I don't say something and you know it should be something that gets done, then you can indicate that as a weakness. The more you know about the cycle, that makes it easier to find weaknesses. So the things about adequate documentation. If I don't mention any sales orders in the question, you might say, hang on a minute, surely there would be a sales order. And you can say they don't appear to have a sales order which initiates the sale and ensures that the information is presented for the customer, the amount sold, and the the dollar value of what is sold. So the more you know about the cycle, the more you can remember about the steps in the cycle, the more you can remember about the controls that can be used, and you should do well. And most of the time, this is the question. This one and audit liability tend to have the highest average mark. I've seen many times where students get full marks for an internal control question because it follows that pattern. And looking at a question here, the picnic limited, I believe I've put that into the tutorials as well. You can ask, do they have pre-numbered documents? If no, that's a weakness. You can ask, do they have all of the documents that should be used in the cycle? Yes, but sometimes there's no authorization procedures. Is there any indication? If they're selling things on credit, then there has to be authorization in place because you don't want to sell to someone that can't pay. That's a strong internal control. So if it's a credit cycle, that is they're selling things on credit and there's no mention of someone having the authority to allow sales to be made of higher amounts, for example, then you can identify that as a weakness, inadequate authorization procedures. The one that is also easy to find is the separation of duties. You can almost assume that what you've got in front of you in the exam is sitting in that perfect world where money is not an option, is not a problem, and you can implement all of the controls that you think would be perfect for the system. Because in reality, some of these things can't be done. You can't separate duties out in the real world because you don't have the money to pay enough people to do it. And then it becomes cost ineffective. But in an exam, you can just assume they would be able to implement adequate separation, that there would be double checking of things. And if it doesn't occur, then it's a weakness. The independent checks of performance will be very easy to pick up because we know in the cycle what should happen. The information from the sales order should be compared to the invoice. The information on the invoice should be compared to the document, the shipping report, which is detailing what's going to go to the customer. If there's no evidence of those things being checked and that's not detailed in the question, then you can say there appear to be inadequate independent checks of performance. Or, if you can't remember those words, it doesn't look like they check everything throughout the process of selling, that no one has checked that the price list was compared to the sales order to get the right amount. No one checked that the sales invoice was compared to the sales order before they went ahead and charged the customer. So it makes it for a preemptive type of question, but it makes it easier to find things. So it wouldn't matter what question I've put here, you could apply all of this. We don't just check Picnic Limited for invoices. We don't check the invoices in this company for prices and accuracy just for this company. It wouldn't matter what question it was. If it's an internal control question, you'd be asking, did they check the invoices, the documentation to ensure it's accurate? If not, it's a weakness. If they did, it's a strength. All right, so if the question doesn't mention anything, you can assume the control doesn't exist. That's a strong assumption that is heavily weighted in your direction. It can only be used if you understand the cycle. All right, if you haven't learnt enough about what the steps are in the cycle, you won't know that it's missing. And that's what auditing is. The more you know, the easier it is to explain what should happen. That was the point of the assignment. I know a lot of people hated the accounting aspect of it, but auditing wouldn't exist without accounting. So the more you're able to research an event and understand how it's recorded the easier it was to explain, well, this is what could go wrong, because you understood the event. The Brazil dam disaster. It occurred in 2015. That wasn't a relevant event. But in the last period that we looked at, there was a settlement with the Brazilian government. There was a new court case that was linked to the original unfortunate event. And hopefully you would have said, if an amount can be measured, then it's probably going to be a provision. And there's lots of paragraphs in the standard that talk about it. But if it was something that's been initiated and as yet hasn't been through the courts, it's likely to be a contingent liability, and you can find the irrelevant information. So the more you understand, the more you have in terms of knowledge, the easier it'll be to find the answer. So here's some more there. I don't need to really talk through that slide. It's just reinforcing what I've just said. So if the question mentions documents, doesn't mention any checking, you can say, there does not appear to be an adequate double checking of information. What could go wrong? Well, the numbers on that document could be wrong, which means the wrong amount is recorded, the wrong amount is charged to the customer, and so on. If you do get stuck, as I said, about the audit objectives throughout the study period, they will help you. You have 15 of them, transaction-related and balance-related objectives to help you. As much as possible, see if you can remember how they link up. And the obvious ones are there, that authorization procedures tend to be associated with existence, pre-numbering, normally associated with completeness, and double-checking things for accuracy. That's really helpful when you do the second part. Finding the weakness is the first part, explaining what the weakness could cause is the second part. Normally what will happen is finding the weakness is normally worth 1 mark, explaining what could go wrong is worth 2 marks. And sometimes it will ask, how would you fix it? That's another mark. So it would be normally 4 marks allocated per weakness. For a strength, it would be 3 marks because there's no third part. You say, what's the strength and what does it prevent? 1 and 2, 3 marks. Any questions about internal controls? Now, I package audit liability with internal controls because they follow the same processes as I indicated at the start of the lecture. For this question, it's a little bit more important to remember the structure, making sure you remember what I'm going to be looking for. Your answer must address these 5 things, especially number 5. Because you shouldn't have any problems with this question. You really shouldn't. You could almost answer it. I shouldn't say this because I am getting recorded, but it's the truth. You can almost answer this question without looking at the question, can't you? I mean, when you think about it, has anyone done the truth this week? For the purposes of the recording, as usual, everyone is always nodding their heads. It's been amazing this semester. Everyone does all of the work, and I'm not being facetious. I'm sure you are doing all the work. But if you haven't done the work, you can still go and look at a question on audit liability and still be able to address it. If you've done this week's tutorial, there are 4 case studies from memory that essentially follow the same processes. And the answers in the end pretty much follow the same answers. What I mean by that is, when you look at the negligence, they always talk about evidence. They always talk about fraud. They always talk about monitoring. They always talk about limitation of scope. Am I going too fast? I think you can pick those up. Evidence, ASA 500. We're going to go through these in a moment anyway, you'll see. But in the exam, I need to see these 4 steps. use headings, make it easier. You don't have to, but you can say, first, establish duty of care. That's going to be the hardest one sometimes. If it is with a client, that's easy. You can just say duty of care, foreseeability and proximity is established by the engagement letter. Nice and easy. Sometimes though, it might be a third party. So don't neglect learning how to look for and answer foreseeability and proximity. After you establish a duty of care, you do the negligence. You find the loss and then link it, if possible, to the negligence to be able to say that they are liable for the amount. So you look at the question. If you're running out of time, you can go down to the bottom, look at what they're asking. If they're saying, do you think the bank would be successful if they sued the auditor for the $80,000 loss, whatever it is? And the question was 48,000, I think, in the tube. So if you see in the question, do you think the bank would be successful? Straight away you're saying, third party. And you've got to establish that they knew about them and that they were going to use the information. So it's quite easy to establish duty of care if there is a contract, but then if we're looking at third parties, then you must establish that the auditors are aware of the third party and that the auditors are aware that the third party is going to use that information to make a decision. That they're going to be induced to act as a result of an action by the auditor. I don't want to turn this into a law lecture, mainly because I haven't done law, so I wouldn't be able to. But just use common sense. Can you show that they knew about them, and does the question make it clear that they're using that information to make a decision? In the tutorials, you can see, for example, that a bank has asked for an audit to be undertaken, and as a result of that audit, they will decide whether or not they're going to lend money to the company. Quite clear establishment of duty of care there. Once you've established the duty of care, this is the similarity to internal control questions. This is where remembering all of the standards that we've gone through in the last 10 weeks makes it a whole lot easier to do an audit liability question. I had told you from the start to establish a set of notes where you always take note of when I mention a particular standard, and you'll see that some of them I mentioned quite a bit, and hopefully that has stuck in your mind. So when I say ASA 500, you know straight away it's evidence. When I say 315, now you know straight away that that's risk. When I say 220, you know that that's audit quality. 240 is fraud. 530 is what time we should go home? No. You know what I mean. So 230 is documenting everything on the part of the auditor. 210 is having an engagement letter. You can go to the nth degree if you want to remember all of them. But the key ones, 220, 240, 315 and 500 are a good starting point for audit liability because they form the focus of whether the audit is done properly. When you start looking at the question, you know immediately that one of the problems is going to be, if you're going to be arguing negligence, they haven't collected enough evidence. So if I don't see ASA 500 somewhere, then I don't know where you've been living, because 500 drives everything we do. Sufficient and appropriate evidence to form an opinion. So if they've done the wrong procedures for inventory, you can say ASA 500 didn't collect enough evidence to value inventory as per 501, so 500 and 501 should be mentioned. Here is the list. This list will apply pretty much to any audit liability question. The only thing you have to do then is to look at the exam question and tailor these generic potential negligent practices, tailor them to the specific question. In other words, if you said they failed to collect sufficient evidence to form an opinion as per ASA 500, you look at the question and you see, look, they only collected evidence for 2 months. So now you're illustrating this with something specific from the question. Try it with the tutorial questions. I mean, they're always incompetent, the auditors in a tutorial or exam situation. The information will be staring you in the face, which means you need to know that it is staring at you, pick it out and apply it to the specific areas of the handbook. If there's fraud, we know that the general principles are, as soon as the auditor identifies fraud, they need to investigate further. And that comes from WA Chip and Pulp, that materiality is not relevant for fraud. When you find it, doesn't matter the dollar amount, you must document it, 230, you must investigate further, 240, and you must notify management, ASA 240. If it's management that is perpetrating the fraud, what do you do? If you find evidence of fraud and it's clear it's management that's doing it, what do? You blackmail them. No, only one person left? No. I'm not serious. Come on, you'll think, what? You need to go to the next level. Who are you acting on behalf? You're acting on behalf of the corporate watchdog. So if you find something wrong, you need to go to the corporate watchdog and tell them, this is what I found, I have serious concerns, and then ASIC will take over. That's what you should do, not the earlier thing. God, you all look so tense. It's as if you've got exams coming up. You can still smile and just, no? Yeah, tell me to shut up, I know. But I was there in your spot as well. I remember not getting lectures like this. Trust me. We ask one question, how do you undertake an audit? How do we prepare for the exam? And the lecturer just says, well, you can't really. Imagine me saying that to you guys now, that you can't really prepare compared to what I'm giving here. How would that make you prepare? And there were no practice exam papers. But you don't want to hear my concerns. Let's continue. Fraud was detected. We know that they need to investigate further and so on. But you need to tailor it to the question. So there was suspicion aroused because of delays in banking. So this should have aroused suspicion. This should have indicated there's the potential for fraud. That means 315 as well, risks. 240, they should have investigated further. So use the facts of the case to illustrate these. Just like in an internal control question, you're probably going to have a separation of duties problem. So you don't just write, there were inadequate separation of duties as your answer. Well, yeah, they were, but can you explain to me what they were? Well, this person was doing this, this, and this. And they're not supposed to. So you look at the question and use those facts. Same as internal controls, same as auditor liability. We've identified a serious number of failures on the part of the auditor in this question. You can throw in Kingston Cotton Mills when you're talking about reasonable persons. That's all we're doing here is we're talking about reasonable persons. The auditor failed to report the banking problem to the appropriate level of management. If you can't remember the court cases, it doesn't matter as much as not remembering the auditing standards. As a minimum, I need to see the auditing standards. That will get you a very good mark. The structure, the steps, discussion of auditing standards, appropriate coverage of negligence, doing all of the steps, you'll get a good mark. And of course, don't forget, if you are running out of time, you can just say ASA 500 without even reading the question, as I said last week in lectures. Obviously, that's not going to happen. You won't run out of time. I don't want you to run out of time. That's why you're here, to develop your strategies. We've established the negligence, the loss. I will tell you, fear not, the loss will be clear. The loss will be clearly able to be linked to the person suing. Now, what I mean by that is you need to be able to say that a loss was incurred by the party that is suing. So if it is a bank and they're suing, it'll be something along the lines of they loaned $300,000 to a company on the basis of what they saw in the financial reports, on the basis of an audited set of reports. The company goes bankrupt, they can't get their $300,000 back. That's a clear loss. So it'd be something like that. You don't have to make any assumptions. It'll be easy to find what that loss is. Doesn't matter who perpetrated the fraud, or if there is a loss, who created the loss. All you have to do is to show that if there is a loss, then the loss is as a result of the auditor's negligence. So if it's fraud, the auditor is responsible for the fraud if it is reasonable to expect that they could have identified the fraud in the normal course of the audit. If it's sophisticated, then they're going to find it almost impossible to prove that the loss should be recovered via suing the auditors. But that's not going to happen. It's not going to be sophisticated, fraudulent behavior. We're just trying to test your understanding of the steps. You don't have to write this in there. You just have to say, step 1, duty of care. Step 2, negligence. Step 3, loss. Step 4, link. And really, this part you can just say, therefore, the auditors are liable, in my opinion. And that's it. You don't have to sit on the fence. You don't have to say, on the one hand, on the other hand. You've only got one hand. Just say, they're liable. Chances are, 99% of the time, it's going to be that they're liable. It's an audit liability question. So we're not really saying, do you think they're going to be liable? We're really asking, explain why the auditors are liable in this situation. Use that mindset to answer this type of question. Okay, inherent risk. Some of the points to look out for, the information, they're all case studies, these standalone questions. They're case studies. So they can have anywhere between 1 and 2 pages written about them or anything between. So there is a lot of information. An inherent risk question will always have a mix of inherent issues, inherent risk issues, and control risk issues. Deliberately so for 2 reasons. 1, to identify if students know the difference between internal controls and inherent risks. And secondly, sometimes an inherent risk question will be broken into 2 parts. Part A, identify 5 inherent risks, 15 marks. Part B, using the information contained in the question, develop an evidence mix that you think would be appropriate in assessing this entity. As soon as you see the magic word evidence mix, audit risk model. That means if there are internal control issues in there, you can use them in part B. Does that make sense? So it's similar to what we did 2 weeks ago in Shoots when we were looking at 1132 with the 3 different audit clients. And really what you were doing in part 2 of the assignment. You assess inherent risk, you assess control risk, that allows you to determine plan detection risk, and then that allows you to talk about the 5 types of tests. Gaining an understanding, test of transactions, test of balances, test of controls, and analytical review. So don't discount internal controls in the question, because you may need to use them, but if they're asking for inherent risks, be careful, don't talk about internal controls. Focus only on the things that can create the potential for misstatement in the financial reports. The beauty of a question in the exam on inherent risks is you can be a lot more general in your approach. And what I mean by that is when you did the assignment, I asked for specific things. So in an exam, you might have an entity, a mining company, BBP, that has interests overseas and has multiple subsidiaries around the world. Then in the exam, you could say, an inherent risk would be they're exposed to foreign currency, which means AASB 121, if you can remember it. If you can't, you don't need to include the accounting standards. AASB 121 relating to foreign currency would be required to be adhered to, because now there are issues about translating and recording things in another currency, and there's complexities involved, etc., etc. So you can stay in the general sense. In the assignment, you couldn't do that. You couldn't just say, it's BHP, they've got interests overseas. Instead, what you can say is, BHP purchased 6.1% shares in a company in Argentina. That means you've illustrated that this period there was an event that needed accounting for in another currency. Therefore, AASB 121 is relevant. Specifically, paragraphs, for example, 10 are relevant because this means you have a qualifying asset, and paragraph 16 indicates that you need to have judgment when establishing the rates. I'm making that bit up, obviously, but you then had to give specific procedures to recognise and disclose. In an exam, you don't need to go to that depth. You just have to establish, there's foreign currency, or they deal with things overseas, or they deal with electronic goods. Great. So then there's a potential for lower of cost and market because technical obsolescence is more of a problem. So the potential for inventory being misstated, that would be a general one in the exam. Tick. For BHP, you'd get very few marks because really their inventory is not perishable. And the way they get around the problem with lower of cost and market is, the iron ore price is pretty low at the moment. We just won't sell any. We just won't take it out of the ground. They can keep it in the ground forever. It's not perishable. There are some of the mines that they've shut down until 2029 to wait for better technology to come along to make it more cost effective. They don't need to pull it out tomorrow. It's not going to go bad. So in the real world, you've got to be a lot more specific and detailed about what can go wrong. In the exam, you're laughing. You can keep it general. Nature of the industry, foreign currency. If there's a lease, straight away you can talk about, forget about that there's AASB 16 coming in. There's a potential there for incorrect disclosure, operating versus financing leases. You can start talking about those immediately. So be careful, as I said, with the information that you find in the question. Something like a background check, the implementation of video equipment to make sure that they can isolate things if people are trying to steal. These are internal control issues. So try to make sure, well, no, not try, make sure that when you're looking through all of the different examples of information, if you're not sure, don't use it. For an internal control question, I might ask you for 4 weaknesses. Usually that means there are about 5, 6 or 7 weaknesses in the system. You don't have to find everything to get full marks for a question. It's the same for inherent risks. If I ask for 4 inherent risks, there'll be 6 or 7. If I ask for 6, there'll be 9 or 10. There will always be more than what I ask for. So you don't have to identify the right inherent risks. They're all equal. The more important ones or the less important ones, there's no such thing. Just find the inherent risks, explain them, and what could go wrong. KPIs are a really good one. When they get a bonus if a certain amount of profit is achieved. They get a bonus if a certain number of membership is achieved. This creates an incentive on the part of the person getting the bonus, which means there's potential for misstatements. In the assignment, couldn't do that because I eliminated it and said you cannot question the integrity of management, so you can't talk about it. In an exam, evidence of KPIs, perfect example of an inherent risk. You can talk about it. Going concern problems are a good example of an inherent risk, because going concern means they may manipulate in so many different ways. Classifying assets as current instead of non-current, classifying liabilities as non-current instead of current to manipulate the ratios, forgetting to record short-term liabilities, accrued expenses, forgetting to record accrued expenses, forgetting to expense prepayments and keeping it as a prepaid expense, so a current asset. Those sort of things can occur when there's going concern issues. You couldn't do that in the assignment because I said you can assume going concern is not a problem. Hopefully you can see why I tried to make it hard for you to use those things, because I wanted to guide you straight to the events and just talk about those events. But in the exam, it doesn't matter. You can talk about going concern, you can talk about fraud, you can talk about general risks, just don't talk about internal controls. Differing price structures, that's always a gimme when it comes to inherent risks, because it's a lot more complex. You're opening yourself up to errors, charging the wrong amount to the wrong group, especially since you're going to need verification. Like if it's a student, they're going to have to supply information. So there's additional steps. It's quite more complex when you have different price structures. And then you might have relationships with third parties, where if they join up with the third party, you give them a payment. Anything like that is an inherent risk because there's a potential for information to be wrong. An internal control there, the security system, but if you talk about it from an inherent risk perspective, that's okay. So if you had said they paid $50,000 to install a security system, then if you just talked about how they would record the $50,000, that they may capitalize it or they may expense it or record it incorrectly, you're thinking about it the right way, I would accept it. But if you just said a security system was installed, which made it a more efficient organisation and less errors could occur, that's an internal control discussion. That's the critical part of this question in making sure you don't do something wrong, is focusing on inherent risks only. More examples there. I think now I've given you a fairly comprehensive assessment. You can see you've basically got the answers here in the slides when it comes to the exam questions. You're not required to refer to accounting standards, but let's be honest, you've just done an assignment. If you've put significant amount of work into it, you'll remember that 112 is tax, the tax rate in the US. 121 is foreign currency. 116 is property, plants and equipment. 117 is leases. 16 is leases. Now, I'm not trying to show off. I'm just saying I've just marked so far 180 assignments. I think if you ask me anything about any of the standards, I could probably walk around and make it sound like I know what's going on. You've done the work, but me reading it has meant now I remember a lot more than I did 10 weeks ago about the accounting standards. You don't have to use them, but if there is something in there and you go, oh, wait, that's similar to what we did in the assignment. I remember it was that standard. Throw it in. Just show that you understand that there's a link between the regulatory framework and what you've identified. Sorry. Every year I just have to make a note. And I'll forget. This time next year it'll be the same thing. I've got to get rid of this slide. No. This annoys me. Okay, because I'm going to take this next year, and if I don't look at it carefully enough, I'll turn up and look at it. Okay, let's move on. All right. Remember what we're trying to do at the beginning of the course. Now, wait a minute. Where is that? Ah, here we go. Audit reports. No. Just remember the three things that we're trying to do in an audit. Check the numbers are correct, that the disclosure is correct, and the entity is a going concern. The process has always been that if the auditor, let's just say, what if the auditor finds something wrong? I don't know what's going on there. With the numbers or disclosure or going concern, they need to notify management and make the changes. If management refuses, that's when you have a modified opinion. So if the numbers are correct, disclosure is correct, going concern is no problems, we have an unmodified opinion. When an auditor finds something wrong with the numbers, if they find something wrong with disclosure, or they find something wrong with going concern, they need to tell management. If management doesn't make the changes that are suggested, there is a disagreement with management which creates a modified opinion. So it means that a modified opinion must be issued in those circumstances. Basically, numbers correct, disclosure correct, going concern unmodified. If the numbers are misstated but disclosure is okay and the entities are going concern, we have a qualified opinion. If it's material, we say it's except for. If it's adverse, we say it's significant. If it's significant, we say it's adverse. If the numbers are okay, but disclosure now is incorrect, it's immediately a modified opinion. Disclosure is mandatory, so you can't not do it. Not following the standards is a breach of law, so by definition, you have a modified opinion. But you still go through, if it's a material misstatement of the disclosures, except for if it's significant, it's adverse. If the numbers are okay, disclosure is okay, and they're having problems with going concern, they need to tell management. If management refuses to allow disclosure of the going concern, then it's a modified opinion. If management agrees, then it's an unmodified opinion with an emphasis of matter. Okay? Now, we've gone through those, last week in shoots. When you're looking at a question on audit opinions, essentially, all you've got to do is follow steps as always, and that is identify the issue. That's the first step. The issue is basically saying, can you find something wrong with the numbers? Can you find something wrong with disclosure? Or is there a problem with going concern? Identify the issue. Second step, is there a disagreement with management? If there usually is, we now have a modified opinion. If there's no disagreement with management, it suggests they fixed everything, it's an unmodified opinion. Most of the time, all of the time, there'll be disagreement with management, just like the shoot. Then, assess materiality. If it's a material item, whether it's numbers, disclosure, or going concern, and there's disagreement with management, except for, if it's significant, adverse. That's basically it. The only other one, of course, is the disclaimer, an inability to form an opinion, which is a limitation of scope. And just remember, it's only adverse if you're looking at a significant issue. A departure from accounting standards is, by definition, a qualified opinion. Now, we're probably significantly past the era of 1031, but you can still refer to it in the exam. Just talk about materiality. You don't need to refer to the standards. All right, ethics, our last little part, can be done in one word: safeguards. Make sure you break things down according to whether a safeguard can be implemented to stop the concerns highlighted by the issue. So highlight the issue, explain why it's a concern, and then ask, can you implement safeguards? If not, don't go ahead with it. If you can, then you can go ahead with it. So looking at audit ethics, the first one, Donald has considerable experience in the mining industry and previously employed by Zia's Mining as Chief Financial Officer. And what does it say? His role was to oversee finalising and release of the financial reports, and feels the experience and know-how Donald possesses will be perfect for undertaking the audit of the company. All you've got to do is identify the issue. And look at this. Again, it's very similar to internal control and audit liability questions. You know what the key issues usually are when it comes to ethics. Things like, what are the rules regarding setting the fees for the engagement? Do they own any shares in the entity? Does family own any shares in the entity? Have they worked previously for that entity, for the client? Is there any relationship between the auditor and the staff in the client? A familiarity thread as well. Independence is a key one. So it still comes back to a structured approach. So step one, identify the issue. Step two, identify why it is an issue. And by why, we're saying, does APES 110 cover this issue? I'll say it does. The formulation of a question on ethics is normally based on me looking at some of the general things that the textbook talks about and APES talks about, like independence, common things, family members owning shares, relatives owning shares, family working for the company, accepting gifts, those sort of things we've gone through in the tutes. Make sure you know what to do with them if they turn up in the exam. And then you've got that list. You can say, yep, that's covered by APES 110. And in some cases, there will be no safeguard. In some cases, you can implement safeguards. All right, so if a safeguard cannot be implemented, the issue is likely to create too many problems. So looking very quickly at some of these. Let's look at B. The mining company is the major sponsor of one of the national football teams. Donald's children are huge fans, and they've organised to let the kids get some complimentary memberships and access to VIP events. So clearly, this is an example of gifts. So the issue is, can the auditor accept these gifts for his kids from the client? Issue therefore is independence. Can a safeguard, or is this covered by the standards, APES 110? Yes, it is. Gifts are always covered by APES 110. And the general principle of gifts is implement safeguards. If there's a material gift supplied, if it's something significant, you shouldn't take it. But there is the grey area that says you can take a gift if it doesn't influence or impact on the auditor's independence. In most cases, what would be the safeguard that you would implement? Don't take it. So in most cases, highlight that there could be a safeguard, but always err on the side of caution and just say the best safeguard in this case would be don't accept the gift. Use the same approach for all of those. Find what the issue is. Is it covered by APES, and should we go ahead with it? Can a safeguard be implemented? If yes, everything is okay. If no, don't do it. That's basically it.